What's up guys, and welcome back to my channel. So today I'm back again with another strategy that we're going to be using to trade boom and crash. We're only going to be trading ticks in this strategy. We're not going to be catching spikes. Okay, so let's jump into it. So for this strategy we're going to be using two moving averages on the main chart, right? Then the MACD indicator, and then the relative vigor index RVI, right? So we're going to be, the two moving averages and the MACD, we're going to be using them to what? To know where the trend is, to enter in line with what? With the trend, right? But we're only mainly going to be using what? The two moving averages, right? And then the relative vigor index, we're going to be using it for our entries, right? So let me jump into that. Let me first show you what the settings for this one, for these indicators, then we'll jump into it. Okay, so here the first moving average is going to be period 50, shift 0, method exponential, apply to close, style and pixel leg, right? Then click done. Then for the second moving average, we're going to be adding period 200, shift 0, method exponential, apply to close, right? Then for the MACD indicator, we are going to be using the default settings 12, 26 and 9, right? Then for the relative vigor index, we are going to be using period 10, right? Then click done, right? So this is what your chart is supposed to look like, right? Then for the conditions of the strategy, right? So the first condition is that the moving averages, they cross in line with what? The trend that we want to enter. So it's for boom, we want them to cross for what? For a sell. So the 200 moving average has to be above the what? The 50 moving average, right? And then for crash, we want them to the 200 moving average to be below the 50 moving average, right? That's the first condition. And then the second condition is that the MACD histogram is below what? The zero level, right? That's the what? Second condition. But we are only mainly going to be using what? The EMAs, right? This is just a further confirmation of the trend, right? So after that, we are going to be looking at the RVI, right? So here, let me show you what we're going to be. So for us to enter, let me remove this pencil. Okay, for us to enter, we are going to be entering when the RVI, this green and the red cross above the level 0, right? Whenever they cross above the level 0, this is for for a sell, right? That's when we are going to be entering, right? That's when we are going to be entering. Okay, let me go to the settings and make this thicker. I think you guys can see the level that I'm talking about. So level is 0. Then I'm going to change the pixel to 2. Then color, I'm choosing black, right? This is the level that I was talking about. This line right there, right? So the green and the red, they have to cross above the 0 level, right? That's when we're going to be entering ourselves. If they cross below this the 0 level like this, they are already below, so we won't be entering, because the market may spike anytime soon. The our stop loss will be larger. We want it to be above the 0 level, so that our stop loss is smaller, right? So that's where we are entering right there. So for the stop loss, we are going to be, let's say you enter right there, right? The stop loss, you place it somewhere here, really just above the high that you're entering, because we are not expecting that high, that lower high, to be broken, right? So we are placing our stop loss right there, and if it gets broken, it shows that the trend has changed, right? So right here, the EMA is crossed here, somewhere in here, right? So this trade would have been valid somewhere around this time, right? Then the MACD was already below the 0 level, right? so it's a strong trend. Then here the wait for the for the RVI to cross above the level 0, we take our trade, right? Then we got another entry here, right? So after it spikes, the EMAs are crossing for a sell. Then the MACD is above is below the level 0, right? And then this RVI, the green and the red, cross above level 0. So we take our trade right there, right? And we hold. Okay, so that's what we are going to be doing right here. This could have been a risky entry. Yeah, of course the EMAs are in our favor, right? But the MACD, the histogram were above the level 0, right? So this could have been a risky entry, though it worked out. But I don't encourage you to take these types of trades all the time, right? So here the EMAs are in our favor, the MACD is below the level 0, and the RVI crosses above the level 0. We take out our trade. So if this is the 5-minute time frame, we're going to be targeting 5 candles. Okay, we are going to be holding for 15 minutes or until your target has been met, right? So if you're using the 5-minute time frame, you are going to hold for 15 minutes for 3 candles on the 5-minute, which means it's 15 minutes, right? Then if you are using the 1-minute time frame, you are going to be exiting after 8 candles, 5 to 8 candles, but 5 will be safer, right? So you can also use the strategy on the 1-minute time frame. Let me show you, right? So here the first confirmation that we need will be the EMA crossover, and here it's to showing a buy, right? So here they crossed over for a sell, right? Sorry, I want this pencil. They cross for a sell right there, right here, right? And then we wait for the MACD histogram to be below. Here the MACD histogram is already below the level 0, right? Then we are looking for entry. Then this spike occurs, but this RVI does not cross above the 0 level, so we don't take that trade, right? And then when we move forward, here it spikes, but the MACD crossed above the level 0, so we're not looking for any entry right here, right? And then here, right, when it spikes here now, as you can see, it spikes, then the MACD is still below the level 0, right? And the RVI crossed above the level 0, so we enter our sell right here, and here we also enter our sell. So you can hold up until 8 candles. You can even reach 10 candles, right? So that's what you're going to be doing. It's quite simple. Just follow the rules as they are, right? Don't force trades, and be satisfied with the profit that you have. Don't be greedy, guys. Don't hold the trade for too long until it spikes on you, until it goes against you, right? So right here the EMA is crossed, right? That's the first condition. The MACD is below the 0 level, second condition. And now we are entering when the RVI crosses above the 0 level. And right here we don't have any trades here because it crossed below the 0 level. So that's what we'll be doing. So it's quite simple. Try this out on demo first, right, before you go live. And on demo, if you practice out on demo, you get to know this lot size that you're going to be using depending on your account size. On demo, use the lot size that you're going to use on real. Don't satisfy yourself with using larger lot sizes that you don't have the courage to use on the real account, right? So try this out on demo, see how it goes, and leave a comment, right? So thanks for watching. This is it for this video.